Good evening. My name is Peter Reznicek from ShadowTrader.net. This is, of course, another edition of the ShadowTrader Video Weekly for Sunday, June 6th, 2012. 2 weeks ago, because I didn't do a video last week, I talked about a phenomenon called door number 3, right? I talked about how the market could easily just spend a lot of time going sideways. It did spend a lot of time going sideways. A lot of that period between the last time that we spoke on these videos was kind of sideways, especially the beginning of this week and the end period of last week. Right, there was just a kind of a slow grind. Market was going nowhere. But that brings us to this week where things, I believe, changed a little, sort of. And by the time you finish this video, I think you'll understand why I say sort of. So let's start with Wednesday, because Wednesday was a really interesting day in the markets where overnight, the market moved decidedly lower. And in moving lower, it actually broke down below the low end of a balance area. And that's important. There was a large balance area in the ES that was multiple days, like 5 or 6 days. And we had to look above and fail. And then we rotated back down to the low end of balance, which is, of course, what the balance rules tell us what we should do. But when we went below the low of that balance area, we did it only in the overnight session of Wednesday night. And on Thursday morning, we rejected and moved a bit higher. And then at about 10:45 a.m. on Thursday, something happened that was very, very important, which was that President Biden offered to cancel the plans for the proposed corporate tax hike in return if Republicans would agree to a 15% minimum corporate tax idea. The market obviously loved that, and you had a strong surge up on that Thursday morning, and then the market closed well back in that balance area, right? Which brought us to Friday, which was, of course, the morning of the non-farm payrolls. These are important because we only get these once a month. If you recall, last month's non-farm payrolls were absolutely abysmal. They expected to have big growth in this number, and it came in somewhere in the mid-200,000s. This one, however, was much better, I believe in the high 500,000s, and of course the market liked that as well. So after that 8:30 report release on Friday morning, futures rallied pretty hard, and then they were able to hold those gains into Friday's session, giving us a more or less trending day that closed on the S&P relatively close to the all-time high and above where that balance area was before, up to that area where it looked above and failed earlier in the week. So a pretty strong showing for the S&P, and the Nasdaq got into gear a little bit as well. Which brings us to the title of this video, which is, what is the market's focus for next week? You don't watch these videos to look into the rearview mirror. You look at these videos to look through the windshield forward so you can get a handle on how the market might react next week and how you should potentially play it. So in that vein, one of the things that I've been talking about, both in these videos and also to my subscribers in the weekly options advisory all the time, is the relative weakness in the NDX. We see this play out for some time. Obviously, the Nasdaq has been sensitive to 10-year rates that have been creeping higher, or rather, kind of holding between, say, 1.5.5, 1.7. And this has been kind of putting a damper on these tech stocks because I think the market was afraid that these rates would creep higher or break out to the upside. And obviously, nobody really wants to be long tech if that's the situation. So in the Nasdaq, before Friday, we had a 6-day consolidation that was pretty bearish, but then the strong action on Friday took us back to the top end of that consolidation period. And at the same time as this happened, the TNX, which is a chart of the 10-year yield, actually collapsed quite a bit. Now, it didn't fall completely out of range. It's still well within that range, as you can see here, but it did go a bit lower. And if it stays sideways to down, that could certainly be a catalyst that would embolden the NDX to go sideways to higher. Now, moving to the S&P, we can see that it has crawled a bit higher, close to that all-time high, and there is some potential for it to keep going. But what I think is really happening under the hood in the S&P is a push-pull between some of the 11 sectors that make up the S&P that are strong and some of the sectors that are really just lagging. And I think that's why you see this sort of lackluster action in the S&P, where it's just really a slow grind as opposed to a definitive move higher. So it's coming down to a battle between a couple of the more heavyweight sectors that have a lot of weight in the S&P that are strong, and some that are weak. You can see here that financials and staples and communications seem to be what are helping the S&P, while healthcare and industrials clearly seem to be lagging. So that push-pull, when you put it all together, is basically creating the chart pattern that you see in the SPX now. Which brings us to the Russell, which is the wild card, as I like to call it. And the Russell is an important one to watch. It's essentially a bet on the American economy because all of these small cap companies mostly operate domestically and not internationally. And as you can see, the Russell has just been dead sideways. It's completely neutral. Even on Friday with the market up strongly, the Russell didn't really participate all that much and had a much more flat performance than the S&P and the Nasdaq. And this relative weakness in the Russell is, of course, just one data point, but aren't they all? The best way for me to show you where to focus is for me to show you where I'm focusing in this market and show you exactly the trades that I've done in this past week. And when I go over these trades with you, I think you should come away with the idea that I'm really kind of bullish to neutral with more of an accent on neutral, really. There's a lot of push-pull in this market. There's a lot of mixed signals, and I don't really think this market is really doing anything major just yet. And I think the trades that I put on this past week will reflect that. You'll note here in my live trades that I share with my subscribers in real time via alerts to their phones, subtle plug there, I am long the QQQ via these call ratios. I'm also neutral on the Russell via these iron butterflies. I am bearish to neutral on Tesla via these put ratios, which are for a healthy credit that I'm collecting. I'm also bearish to neutral on Amazon for credit as well, also through a put ratio structure. And I'm bearish on Netflix here, as you can see, which is looking like it wants to break down on its daily chart. I'm also long gold, which is kind of like an inflation play, and that's via these call butterflies. And as you can see, I'm also selling puts against those to decrease my cost. And that's all for this week, but let's have a very, very short recap where I think we can just tie all this together by focusing on just 3 key points for next week, okay? The first point is, will the bullish sentiment from the non-farm payrolls and the corporate tax news carry over into next week? Okay. Number 2, watch that 10-year yield chart. I think that the Nasdaq is starting to get sensitive to it again, certainly as it broke down on Friday. Tech stocks rallied. So watch that chart to see what it does and how it affects the NDX. I think if the 10-year remains soft, especially if it breaks down further, that will be a tailwind for tech stocks and we'll see the NDX move higher. And last but not least, the Russell, the wild card as I always call it. Will relative weakness remain in the Russell? Will the Russell continue to go sideways while the rest of the market may move a little bit higher? If you pay attention to these 3 things and how they're related, then you will know what to do next week and you can comport yourself accordingly. Check the email address down below, asktheshadow@shadowtrader.net. Here's what I want you to do. Email me at that address with the words track record in the subject line. That's all you need to do. No body, nothing else, just track record in the subject line, and I will send you a daily recap all next week of not only all of the trades that I took in Weekly Options Advisory, but every alert that I've sent out, every What's Peter Thinking recorded message, all of this stuff gets recapped at the end of each trading day, and subscribers get it at 4 p.m., all right? I'm going to send you all of that at the end of the day, every day, all next week, so you can get a better handle on exactly what I'm doing for my subscribers. Inside of that email, there's also a lot of other things that you may be interested in, which are all resources that I put out only for subscribers. Go through all of that, check it out. There's some stuff there that certainly you can use in your own trading, even if you decide not to join us. And at the bottom of the email, if you scroll all the way down, there are some coupons that are subscriber-only coupons, but I'm going to share them with everybody since everybody will be able to see these emails. So even if you don't decide to join me in the Weekly Options Advisory, maybe there are other things in our store, such as ThinkScripts or whatnot that you may be interested in, and you can get a discount with the special codes that are in the email. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.